What's up, fellow traders? So today we tested the support, we went below it, and we prevailed. What seems like been a pretty boring week, 2 weeks, has actually been a really exciting, successful test of the floor, the support. I know we've been down to 7,500. We've been under 800 on the S&P, but like I pointed out on the chart, it's only been brief dips below that. They're still pretty much uncharted waters. I really like how we closed above the 78.80. If you were watching the market today and yesterday, it's just amazing how it battles that 78.80, and it's nice to see us above it. That's great. It wouldn't have been good to close at 78.60, Instead, we're up in the 7,900s, and the S&P above that 830, 832. I'd love to see that. That's a big mark. That's a big point for the S&P to be above, where now they can move up to their 50-day and hopefully break through and make that charge for that 200-day there before March, end of April, when the new lows will come, if they come. That's what I'm hoping for anyways. As far as my trading today, one more thing too, the volume pulled back a little bit today, which was a good sign while we went down there and, tested that 78.80, and the S&P dipped down under that 830. Volume was light. I like that. It picked up at the end of the day, actually, when it did that, nice pop. Volume actually picked up, So as far as my trades, I added to oil, OIL, at the low today, 1685. That's the chart I'm going to go over with you. I also added a little bit to my Disney at the low today, and I did dabble in on some more Schwab down there right at 13. So let me grab this camera and let me show you this oil chart here for tonight. This is the year chart for oil. You can see the big drop. Okay, why I started buying oil right here. Let me show you something here too. Let's say you're holding oil and you're adding here on the 200-day thinking, it's not going to collapse, and then we get this downtrend here where you're like, damn, it happens to the best of us. But this is what we do. You don't dump and panic right here. It just broke through the 200-day line. Look, it hasn't broke through it for a while. It just broke through. Nothing's going to break through and then just go. It's got to come up and test. So that's where you dump out and take your loss. A lot smaller loss from here to here than from here to here. See how that works? That's why I think the Dow's going to 10,000, because we busted through it and have never returned to it. Now on with this. So here's our oil. Last time it hit the 200 days, that's where we'll start our trend. We'll come down these tops right here, and boom. Okay? This right here is where oil comes onto my radar. Broke the downtrend. I like that. This is what I do for day trading too. Like if this is a day chart and the Dow's going down all morning like this, as soon as it breaks through, I go, okay, good. And then when it comes back and tests, boom, I buy. And then more than likely we get a rally. Okay? So here's oil since October, started to drop. We broke the uptrend, or the downtrend, excuse me. We came back. We shot down through it. We battled it. Let me zoom in a little bit. We came up through it, and now we, boom, dinked it today. We're back dinking it. We're ready to run. And then look at this volume spike down here on these last 4 days down here. That's a good sign. That means whoever's selling is selling. Whoever's a seller hopefully is done selling. Okay? We don't know the future. We're just trying to make money. What an entry point, though. Okay, I'm not saying go all in. You never go all in. I started building a position right here because it danked it here and kind of started to flutter. I thought maybe we'd go like this. I got a gift. That's why I never, I probably won't get my full position I want in this. But you know what? I got a little here at 18. I got a little at 1685. If it takes off, I'm happy. That's the oil trade, OIL right there. That thing is ready to go. That's my call. As far as the markets, how I talk about the Dow, where I just showed you where oil, when it fell through the 200-day, I used to be one of those traders, panic and just sell out, and then you watch it go up and rebound. It always happens. Look back on the Dow charts. Do some research yourself tonight. You'll see where when it fell down in 2001, 2001, when we had the crash and the terrorist attacks, it battled 10,000. Then we had our dip, and it was a quick dip. And then it came back up, and we hung at 10,000 from like 2002, 2003. I mean, I'm going off my head on all the time. I'm going off my head. But we went 3 years. We trended around 10,000, 10,008, 9,800, 10,5, 10,000, 10,8, 10,000. I mean, you'll see it until like 2003. We started our climb up to 14,000. Okay? If this economy and this banking system and credit market is as bad as they say it is, and we don't realize how bad things are going to get, and we are going back 20 years as far as stock prices, the Dow, the S&P, they're going to take this thing down to 4,000, and and the S&P down to 600, NASDAQ to 1,000, 700 even. It's got to go touch 10,000 first, and the S&P has got to go up to like 1,100. The longer it takes, the lower our trend line drops, so that means it doesn't have to run as high to make that correction. But 10,000's huge on the Dow. Good luck.